Can an online calculator value your business? Hi, this is Josh Horn, CPA of Horn Valuation. I help owners build, value, and sell their business. Short answer, maybe. However, just want to let you know that there may be some jurisdictions and such that do not allow an online calculator, such as in court or for the IRS. Setting that aside, could you use one? Maybe. The value of any business is a function of three things: cash flows, risk, and growth. Cash flows go up, risk goes down, growth goes up, the value goes up. It's about the future. All right, that's the other piece. Nobody buys the past. Whether you're buying a stock on the stock market or you're buying a private company, such as what I value and what you're probably looking at to buy or to sell, you care about what it's going to do going forward. All right, what's the future hold for that business? Is the online calculator dynamic or is it static? Does it assume that everything is going to stay the same and not change? Or do you have the ability to change the inputs? Because garbage in is garbage out, as you've heard before in any kind of model. I like dynamic models, not just because I like to add complexity, but because most businesses that I value are probably going to experience some level of change. It could be a minor change, it could be a major change, but there are some, and you may be looking at one or you may be one, where the dynamics of the business itself is not changing much and it's basically growing at the inflation rate. I don't run into that very often where nothing is changing, and it's not just about the P&L or the income statement, it's also about the balance sheet. What's the debt structure, the working capital, all these inner workings that feed together, because the cash flow is a combination of the balance sheet and the P&L or the income statement. So when those come together, they create the cash flow. Let's talk about that first one, cash flow. Let's say for simplicity, we're talking about a controlling interest. That is, you can control the business and it's fair market value, hypothetical buyer, seller, standard of value. And you can look at those on prior videos I've done if you don't know what those are, but let's just keep this simple for now. Are those cash flows going to change? Let's take a look at a couple that often change when I'm doing the work. Owner compensation. Is that a fair market value, arm's length owner compensation? That's typically a W-2 in a corporation, an S corporation or something like that. Or is it way below, or is it way over? Does it need to be adjusted to set it to fair market value? Could have a major impact. Rent expense. Is there any? Should there be any? I valued a business not too long ago where the owner owned the building and wasn't paying any rent. So that arguably in that instance was a rent that was under fair market value, because if the building was separated and the operating business had to pay a rent, it would be part of the expense structure and the profit and cash flows would come down. Okay, just a couple examples. How about risk? I'll give you a couple of real good examples here. Oh, Sally's leaving. Sally was your best salesperson the last 3 years. Yikes, that stings. Can we replace Sally? Can you replace Sally as the salesperson? That could have a dampening effect on risk or cash flows or possibly even growth. Okay, but let's just say for the sake of argument, we're going to address that through risk. We're going to say there is a higher level of risk to the cash flows because Sally's out the door. And we don't know if we can replace her. Maybe we can replace her with somebody comparable, maybe not. Okay, so that's an example. Does the model know that? Does the online calculator know that? Are you incorporating that? Are you asking those questions? How about customer concentrations? The very first business valuation I did, 90% of the sales came from one customer. You want to talk about high risk. Okay, that customer pulls out, that business probably ceases to exist. It dies, it goes bankrupt. Have you looked at that? Is that something you've asked about? Is it relevant? Some businesses, some types of businesses, this isn't an issue, but it's always a good idea to ask, to see sales by customer, break that out. What does that look like if they lose their largest customer? What kind of risk impact does that have on the business? How about growth? Is the business growing? Is it dying? Where could it go? That's the most important thing. Could it be grown given the proper care and changes if you're running the business or if somebody else is running the business? Many of the online calculators assume a static level, inflationary level of growth. Okay? Important to understand what the long-term growth you're applying is. And in actuality, sometimes what I do in a discounted cash flow model is I'm modeling growth above or below a long-term expected economic growth. And then I'm getting to the end, and then I'm using the long-term growth rate that I think for the overall economy. So there can be a time frame where it's maybe growing above that or maybe growing below that, and at some point it's going to reach the level at which it will stabilize. One example. Let's wrap this up. Do you understand the business? If it's your business, you probably do, but if it's somebody else's business, do you understand it? Going out and taking a look at it, there's often no substitute for that, I found. See what's happening on the plant floor, in the office. Understand what they're doing, how they make money. Very important. Ask questions. Ask a lot of questions. Over time, these online models are going to get more robust. Artificial intelligence, there's going to be a lot more expansive models that will develop. There's no question in my mind. Right now, we don't even actually understand the human brain. Okay. And what happens is in your brain, in my brain, we ask a question, we get an answer, and then that leads us to another question. Is that model going to do that? All right. Some of the questions I posed today, you get the answer back and you go, what about this? And so what I do when I value a lot of companies, especially when it's a conclusion, a value report, I have a long list of questions. That's really what I have to do to meet my professional standards and to feel comfortable that I value the business correctly. So ask those questions. Where is the business going? It's about the future. Do you understand where it's headed? Very important. And then finally, step back. The best advice I ever got when I got into this profession is, would you pay X for that business? Does that make sense given all that you know? A good way to model this is using payback period. I don't have time to show this to you today, but it's really a simple way you can model this in Excel, showing a down payment, borrowing for a reasonable amount of interest rate, using the cash flows. How much time does it take to pay back? One way you can sanity check it. This is Josh Horn, CPA of Horn Valuation, and this has been Can You Value Your Business Using an Online Calculator? Have a great day.